I'm Russell, founder and CEO of Community Financials. We help make the accounting easy for board members at HOAs and condo communities all around the United States. There are a lot of things that boards believe about switching HOA accounting providers that simply are not true. I hear them on almost every call. Today, I want to bust the most common ones so your board can make a decision based on what is actually true, not what you've heard. And like a lot of myths that you hear, they're not true. So let's get into it. It does not take months and it does not disrupt everything. That is truly a myth. We connect with the current provider, we get the financial history and homeowner data, and most communities are up and running in 30 days, some faster. We've done it in a week. The transition is almost never as hard as boards imagine. It also is a myth. You can switch at any point during the year. We pick up from wherever the community is, carry the opening balances forward, and at year end, we deliver everything the CPA needs in one clean package. So all the year to date information is updated in that handover from the previous provider to what we're doing, and then we'll have a complete financial picture that the accountant can use for either tax or audit purposes. There's no wrong time to fix a problem. That's false, because what we're going to do is we're going to collect financial reports for the periods that the board has already received for the previous fiscal year, the year before that, etc. And any historical information that you need, like active transactions, delinquencies, a complete general ledger for your current year, all of that information will be stored as historical reference points in our system. And we're going to have owner past due balances and all of the accounting for that year that you're going to be able to see on a go forward basis. You should never have to start from scratch. Most communities are fully transitioned within 30 days. And a lot of times, what we hear is that the homeowners get additional things, additional tools, additional clarity that they didn't have previously. So, for example, they're going to get a new portal that they can log into and see their account balance. And yes, they may have to input their payment information into the system. They may have to update where their check gets mailed to for payments. But after that initial a little bit of work, it's going to be usually a much better experience. They're going to have a clearer picture of the association's financial picture, their financial picture, and probably some other tools also. The homeowners who notice are usually the ones who are relieved something changed. That is a myth too, because we don't charge an onboarding cost. And there's an expense that we're not talking about, which is the expense of the board having poor accounting information. They may lose the ability to collect past due funds. They may make bad decisions because they have bad accounting information. They may have late fees for paying vendors late. They may have extra hours spent that they have to do to chase down accounting information and make corrections with a provider that's not doing a good job. So I would say that it costs them more to stay where they are versus where they would switch to a service that provides more value and a more accurate accounting. I would say that that is typically going to be false. Most states have regulations that require your current providers to provide the information to the new service within a set period of time, and it outlines that your information is the property of the associations. In doing these transitions for many, many years, it's very infrequently that we don't get information of some sort that we can use to build out and get communities onboarded within 30 days. There may be times when there's some hiccups along the road, but typically those are few and far between. So I would suggest that that's not something that should hold you up from making a decision to change at your community. The board sometimes will get feeling of inertia or analysis paralysis. They don't want to deal with making a change. So the homeowners have to update their payment information one time. It could be disruptive to the way they do business. However, I would say the alternative to that is continuing to have accounting that is poor, boards that have to chase down questions to accounting, get corrections to accounting. I've seen boards that are running their own set of books because they don't trust the books that they have currently, which is adding tens of hours per month to the job of a treasurer. I'd say that making a change is like making an investment, a month's worth of research, then a month's worth of change, and maybe a month's worth getting up to speed in the new systems and learning them. After that, you're going to have months and months and months of time that you've reaped, that you've gotten back, where you're not spending 10 to 20 to 30 hours a month on accounting mistakes and questions and issues. And that is going to free the board to work on larger issues at the community that really make the homeowners happy. Make the time to make a small change, and it's going to have a meaningful impact on your community. I would say that this is false. Most of the time, you're going to have support staff that are helping with those systems. That's going to make it easier to learn the systems, and the systems are just going to be there for the people at the community that can use the transparency and wants those tools. But the other part of the community that may not be as up to speed on technology will still be able to get information. A mailed statement sent to them so that they can pay their bill by check. If you're used to getting an email, financial reports printed out locally, if you want to touch and feel the paper, you could still do that. But we have a learning library also that has step-by-step guides, instructional how-to videos, and we have staff that helps with making this easier for both the boards and the homeowners to meet them where they are. If any of these sound familiar, that is a good sign. It is worth having a conversation. Most boards that reach out to us tell me afterward that they wish they had done it sooner. The hardest part is usually just deciding to look into it. You can start at communityfinancials.com, our website. There's a scorecard where you can see how your current setup stacks up, and a cost calculator that shows what your community's accounting is actually costing you right now. If you want to talk through what a transition would look like for your community specifically, we're glad to have that conversation.